Markets rise this morning in anticipation of earnings season and the inflation report coming up. That's really the big topics for today. Inflation reading out this morning at 7:30, expected to push higher here. Now, is this going to push the Fed to potentially taper sooner and more aggressively? Atlanta Fed President Raphael Bostic said yesterday they may have to start actually thinking about tightening and tapering much sooner and much more aggressive because of what's happening with inflation. We're going to really be watching this closely as inflation and really the issue of stagflation become much more prevalent. Now this morning though, futures are pointing slightly higher. Been a really kind of sloppy trading week or so as markets have been under pressure here after breaking above the 100-day moving average last week, back below it yesterday. This does start to put us back towards a retest of the recent lows if markets can't climb back above the 100-day moving average today and hold above that through the rest of this week. Markets have remained volatile here, not making any progress despite the fact that we're on money flow buy signals. Again, not a great sign here, suggesting that markets remain very weak. We also have some earnings out this morning. JP Morgan and Blackrock both beating earnings estimates. JP Morgan this morning beating estimates. Stock has been coming back down towards the 20-day moving average after really this nice little spurt in the financials over the last couple of weeks. Now, interestingly enough, JP Morgan did beat earnings today, and stock is looking to point up this morning at the open, but they beat earnings by reduced loan losses and not really increase in earnings. And this has been one of the real telltale stories of the financials as a whole, is net interest margins are now near record lows for these companies, and yet the way they've been beating earnings is through stock buybacks and through moving loan loss reserves back onto their books. Beating earnings by manipulation really isn't that strong of a showing for the banks at this juncture. But again, JP Morgan hasn't done a whole lot here over the course of the last several months. It did finally break out here, gave that up. And again, we are looking really just for more of this consolidation in price. It has not been a great performer this year. Now, BlackRock also reported earnings this morning. Larry Fink out promoting his ESG funds because, of course, that's where he can charge you twice as much for the same fund as the S&P, get the same returns for twice the cost. Good for BlackRock, not so much for you, but BlackRock's been actually having a very big correction here, has come right down to the 200-day moving average, holding support here. Again, if I'm long BlackRock, I might want to be a little cautious here. Performance hasn't been great. Money flow buy signal is very overbought here with very negative money flows. This stock really looks to be under pressure here. Probably not an area I want to have in my portfolio at the moment. JP Morgan and Goldman Sachs look to be better performers right now if I have to own financials in my portfolio. Coming up over the next couple of weeks, though, we'll go into earnings as we get there because we're about to get into the bulk of earnings season over the next couple of weeks. But watch out today for inflation and comments from the Federal Reserve because, again, if inflation comes in a lot hotter than expected, we can certainly expect to see more commentary about the Fed needing to taper and potentially even taper more aggressively than expected, and that would potentially weigh on markets and your money. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.